ICP is currently finding support on its 200-day exponential moving average. However, at the same time, its 50-day simple moving average and 50-day exponential moving averages are being resistance. So we are finding that ICP is being pinched with lower highs and higher lows. Guys, today we are jumping into the technical analysis on ICP, where I'll be sharing my ICP price prediction for the short term. Let's roll that intro and get right down into it. Hi guys, welcome back to the channel. My name is Nick and today we are discussing ICP. We're going to be taking a look at the technical analysis, sharing my thoughts and opinions on where things are going. As I get into today's video, if you find it useful and informative, smash that like button. If you're new, subscribe, and let's kick things off with this one right here. So ICP paired up with USDT, we are on the one-day Binance chart, and you can see that we've been finding really good support on our 200-day exponential moving average, and that's where we are right now. Now, historically speaking, we have seen the 200-day EMA being a great area for support for ICP, right? We can see that every time we found support here, we've had pretty decent runs. We had a 53.53%. That was from the 13th of April to the 21st of April. We can see that we had another test over here on the 13th of May, where we rallied up 23.87%, finding resistance on the 21st of May. And right now, we've been testing out the EMA again. Now, if we can hold support here at the 200-day EMA, then we are going to be looking for $14.65 to $15.42, right? This area is going to be a pretty significant run where we can see a potential return of around 26%. Okay, right in line with everything we had seen previously from the previous tests and support of the 200-day EMA. The differences, though, are that the short-term kind of 50 EMA, 50 SMA, they are significantly lower in price than where it was before, right? We can see that these were hovering around that $14 to $15. Now they're hovering around $12.81 for the SMA and $12.83 when it comes to the EMA. And so these are resistances that we need to see a clear break above in order for us to gain some form of traction. Now, the concerns I have here is that I don't think we are necessarily done just yet, and we might actually have to wick down lower than the 200-day EMA before we get another run to the upside. So all eyes are going to be on that, in my opinion. Now, if I do connect a trend line from our low wicks here, you can see that our trend line is coming in line with our 200-day EMA. So the only way that I see this really breaking down is if we actually have a complete break of our trend line, break of our 200 EMA, and we do see significant slippage where we'll start testing out those lower ranges where we will be kind of looking for anything lower than $10.91 in my humble opinion, which will be a great place for dollar cost averaging as well. Now, if we do get a clean breakout and we find great support here with great new fresh demand coming in, then we obviously do want to be rallying above $12.83 and ideally closing above it. A close above that is going to signal to the bulls that we can go long and we can probably take out 14% in profit. So there's a couple of different ways I could approach this. We could approach this by going long right now on our 200-day EMA with take profit around that $14.67 with a tight stop loss lower than the previous swing low, coming in at around $10.57. That gives us a risk reward ratio of about 2.12. And there's a lot of pieces of information in that to kind of dissect down. Ultimately, the risk reward ratio is exactly what we want it to be, higher than 1.5. Anything lower than 1.5 is not going to be good risk management. Essentially, you need to be earning a decent amount of reward for every $1 of risk, right? And in this particular case, where we have a 2.12 risk reward ratio, that means that we're going to get $2.12 for every $1 of risk that we put up. So if we put in a $10,000 trade, then we are going to be looking for $21,200 in return. should this trade play out, right? So it keeps it kind of nice and simple. Now, a short opportunity would happen here if we lose that 200-day EMA with a closed position. A wick doesn't count, in my opinion, but if we do close lower than the 200-day EMA, we'll put a tight stop loss higher than the previous swing highs or above the 50 SMA, 50 EMA, and we target out that lower range. Again, you can see the risk-reward ratio on this is not ideal. It's lower than 1.5. It's currently sat at about 1.1. So the two ways to manage this: you either lower your stop loss, which would not be great risk management, or alternatively you look for more profit. Ultimately, the short doesn't seem to be the one that would be really good in terms of risk management, so you'd probably wait for the crash and then go long when we see a reversal coming in the market. That would probably be the better play, in my humble opinion. But for ICP here, it does look like we're in an interesting spot. We are consolidating down with lower highs, but we do have the higher lows here, which is showing us with some interesting potential. This would be the idea that we actually have a bullish break to the upside, which I do think we are likely to see, with support being found on that 200-day EMA as well. Now, if we go ahead and throw in the smart money concepts and see what's going on here, we can see that everything is actually looking pretty bullish. We're down in the discounted range, right? So this is a great place to dollar cost average. We've got a strong low, not likely to get lost, as everything else looks pretty decent. Equilibrium is just a little bit higher than our initial target range between that $14.65 and $15.42. So actually, from a smart money concepts point of view, it seems to be a good place to be thinking about long positions and potentially spot swing trades. Now, if we roll this up into a weekly time frame for ICP, you can see that we are still potentially looking for a bit of a move to the downside. Now, there's no guarantees on this, of course. We are looking to find support on the 50 EMA, the blue line coming through here, and the yellow line, the 50 SMA, is also looking pretty good. If we were to see a complete collapse down more towards the $7 level, then that is going to show us with our price potential being somewhere between 53 and 85. I spoke about this in the previous video. Obviously, there's still that potential where we see fantastic runs, and lots of people will speculate as to whether or not ICP will go up to new all-time highs. But for the most part, based on the data, based on the trading behavior that we see currently with ICP, really we're talking about $53 to $85, which wouldn't be a bad return. You'd talk about a 10x if we have a decent correction in the market, right? And if you were buying down at $2, then that's looking very, very juicy in terms of where this thing has could potentially be going at 1,000% upwards to nearly 3,000%. So good returns. They're definitely not the same as what we have seen with some other altcoins over the years, like Cardano at 17,000% or Matic at 45,000%, VeChain at 18,000%. Nothing like that, but still pretty decent returns for the size of ICP. Okay, so for the most part, I think this one's actually very well placed. I'm not terribly too concerned over its current trading behaviors. It does look like we're going to see a small bump to the upside. That might be followed by a significant run to the downside before we find a decent area of support to kind of really rally up nice and strongly. But you can let me know your thoughts on all of this in the comments down below. Do you agree? Do you disagree? What's your price predictions for ICP by the end of the bull market? And if you are new, subscribe if you've enjoyed today's video, smash that like button. If you haven't checked this video out, go ahead and find out what's going on with Cardano's ADA.